Yeah, look, I mean, gold is the universal currency and it has been for millennia. It's recognized as a currency regardless of where you go in the world.
That I have a hard time explaining to people is the banks don't have any cash. And if they have a bail-in, which they did in Greece or whatever it is, Iceland, there's no money there. And you were talking about a 40% decline in reserves in the gold industry. What does that mean?
Well, that means the gold in the ground that's been delineated by exploration drilling. And the industry has done an exceptional job over the last half a dozen years of harvesting returns from their existing mining assets. What they haven't done is reinvest back in exploration and development, because at the end of the day, a mining company is a collection of finite life assets. Every day that we mine an ounce of gold, we die a little bit unless we're reinvesting back into exploration. And that hasn't happened because there was quite a party 10 years ago. Post the credit crisis, gold rose to over $1,900 an ounce. Copper was reaching new highs at the time, and the industry was investing in significant new mine capacity, but they strapped on a lot of debt doing that, and the input costs escalated dramatically because of the rush to invest in new capacity. There was finite resources available to do that. And so we saw inflation in labor costs and input costs generally. And that undermined the leverage proposition that investors were looking for in gold stocks, and investors stayed away. And so the mining industry said, well, okay, we have to deleverage. We have to harvest the returns we promised on these assets. So they went through a half a dozen years of doing that very, very well. The industry is at net zero debt now. So they've done a good job of repairing their balance sheets. But what they didn't do is replace what they're depleting. And that's why we find ourselves in this kind of existential crisis in the gold industry right now. And because of that high risk ratio, you're deploying that capital and spreading it around, diversifying. So the juniors are starting to spend more capital. They're starting to get more traction in the capital markets. And inevitably what will happen is the established producers will have to start to take the juniors out that are successful, and they find something meaningful, economic, large enough for the seniors to actually deploy capital towards. So I say selectively, you're going to start to see some M&A in the junior space. You know, it's a commodity like anything else. It's demand supply driven. So the price action we're enjoying right now in gold and have over the last couple of years and likely to enjoy going forward is being driven by two factors. One is this declining supply. So it's a remarkable inelasticity of supply to price. Even as the gold price has been going up, the industry can't just flick a switch and add more supply. The lead times of new production are long, sometimes decades, to bring new mines up into productive capacity. But the demand side of it is also very, very constructive because we're in a lower for longer interest rate environment. We're actually experiencing nominal rates that are negative in some cases, and on a real basis, for sure, given where inflation is, we have negative real interest rates on sovereign debt. So there's no opportunity cost to owning gold today. It is the one financial instrument, monetary instrument, that doesn't yield anything. But when sovereign debt is yielding negative on a real basis, gold is not a great place to park your capital, and it's very finite in quantity. So it's really driving capital flows into gold, and for that matter, into cryptocurrencies, which is being perceived as a store of value like gold, as an alternative to gold, is the undermining of fiat currencies that's going on with printing, with reckless abandon by central banks on a coordinated basis globally, debasing their currencies to inflate the economies and debase also the debt. The massive amounts of sovereign debt that's been strapped on is unprecedented. And the only way that these governments can hope to repay the debt is basically to debase the debt. And the way to debase the debt is to debase the underlying currencies. In that environment, you want to own the one currency you can't print, which is gold. It's very finite in quantity, 200,000 metric tons that's been mined since the beginning of time, which would fit into 4 Olympic-sized swimming pools. So volumetrically, it's a very small quantity. And we only produce as an industry 4,000 metric tons per year. So we're only adding 5% to global supply per annum. So it's not like something we can print like fiat currencies can. Hard assets are finite. Paper is infinite. It's only limited as supply by how much the printing press can spit out on a daily basis. And now it's not even printing press, it's zeros and ones, it's digits. And And, the central banks are talking about it getting into the digital currency market. So they're going to try to make fiat, that another fiat currency. So really, there's no limit to what they can introduce in the economy in terms of monetary stimulus. And that's why we're seeing all-time highs in the equity capital markets every day, where we're seeing hard assets being driven to all-time highs, whether it's commodities, whether it's real estate. That's being driven, that's inflation by another name, but it is inflation.
Right. So the thing I was laughing about with David and all this, is they have these junior miners and exploratory companies, and then you have the majors. And the majors are like Barrick and those characters. But they need the juniors to go out there and dig around in the dirt. So that's exactly what I was doing. I was digging around in the dirt, and I was all over the world looking for that stuff. I was in Arequipa in Peru or something like that. And it's really an education. So all you guys with your 401ks, grow up. I mean, you haven't seen nothing yet. So anyway, what's happening to the juniors then if the majors can't get more reserves?
Well, selectively, they've actually been able to access capital markets now. That wasn't the case a couple of years ago. They went through a nuclear winter as the seniors focused on harvesting, cash flows from their existing assets. They just weren't putting money to work with the juniors. They weren't exploring in any meaningful way, and the capital markets ignored the juniors. But the juniors are actually starting to raise capital now, and they're doing that from a couple places: traditional sources, the equity capital markets selectively, but also the established producers are effectively outsourcing their grassroots exploration to the juniors. They're putting capital to work within the juniors, taking tolled investments in them, so they actually start to put some capital to work. And the seniors are taking more of a portfolio approach towards that. They're deploying capital across 15, 20, 30 names within junior space, small amounts of capital, because the success ratio is so low in the junior space. It's almost like winning a lottery when you actually find something.
That I have a hard time explaining to people is the banks don't have any cash. And if they have a bail-in, which they did in Greece or whatever it is, Iceland, there's no money there.
No, it's just digits now, digits in a ledger. The actual physical paper currencies is disappeared, and what we're getting is a proxy for paper currencies in the digits on their ledgers, on their balance sheet, increasingly. And the fact that banks are actually talking about getting into the cryptocurrency market, digitizing their own currencies, is inevitable. And so there's less and less visibility in terms of where your cash is right now. And that's why I think it's so important to have a component of your portfolio in gold, whether it's physical gold in a vault, in a safety deposit box, or whether it's a proxy for gold in terms of the gold equities or the royalty companies. Yeah, look, I mean, gold is the universal currency and has been for millennia. It's recognized as a currency regardless of where you go in the world. And it can be exchanged for local currencies readily anywhere in the world, every corner of the universe. And that's really the beauty of gold, is its universality and its inability to be debased.